telling you, this investment can double your money in 3 weeks.
You could keep that. Well, I like the play safe, right? Whatever investment money in, I just want to make sure it regulated.
You see, that's your problem. All these regulations just stopping people like you from making good money. What's the point?
All those regulations is really to ensure financial stability. Financial institutions are actually regulated so that they're responsible, act responsible with respect to people's money and what they do in order to make sure the system is healthy. You see, Central Bank of Barbados regulates commercial banks and what we call Part 3 companies. These are like the seniors, the capital, and those sort of companies. The Financial Service Commission, FSC, regulates credit unions, insurance companies, mutual funds, and pension funds. So these are others. And between the Central Bank and the Financial Service Commission, they regulate both of them. In a nutshell, both institutions will issue guidelines to their licensees that they are required to follow. They'll set, for example, the standards of how much money banks got to keep in reserves in case persons come all of a sudden and require their money. So a certain amount of demand. The central bank and the FSCs will dictate that kind of information. How they manage risk, how to report on financial sector activities. In fact, all financial institutions, right, are supposed to report all their financial activities on a regular basis. And that's actually sending information to the central bank and the Financial Service Commission. But the central bank also do what they call inspections. Go into the banks, inspect their books and how they're doing their financial business. Because international standards will dictate certain ratios, and they call them prudential ratios, like how much capital they must have relative to their overall asset base, how much loans they can have, those sort of things. And in addition to monitoring the performance and the current position, the regulators will do sometimes stress testing.
What's a stress test?
A stress test is a scenario analysis that banks carry out in order to determine, and financial institutions to determine how a particular scenario may impact their balance sheets and their performance. So you remember 9/11? In fact, don't go so far back. Let me go to last 2020.
Pandemic.
The pandemic, and that would impact tourism. And tourism is a big part of the economy, which means the loans, etc. People can't pay back loans and things. That will affect it back. So that's a real life thing. That's a scenario. Prior to that, though, the banks would have done their scenario analysis to see how they will impact the loans or how they provision themselves, etc. So those things are important in order to help the banks and to understand what may happen and to prepare for those kind of challenges.
Okay, I didn't know what I do. So, like, how would I go about for the results of this stress test?
Man, every year, the central bank and the Financial Service Commission, they produce such a report called Financial Stability Report, and it's published on the central bank website. And the report, it explains the stress tests it does, it reports those kind of stress tests, and the idea is to identify where the pressures so the banks and financial institutions know that, look, we're a little weak here on this area, we're strong here, let's work on that and improve it. So that's the real idea.
You made this sound like some real serious business.
Boss. In fact, it's so serious that it's one of the two major objectives of the central bank. The first one is to protect the exchange rate, the next one is to ensure financial stability, because we're a small island. And if you don't have a stable financial system that people got confidence in, then persons not going to want to do financial business. They'll start to do things outside the system, and that doesn't help anyone. So we got to ensure that individuals have confidence in the system and it works well. In fact, you probably don't even know there's something called the deposit insurance that insures every customer in the banking system for up to, it is $25,000. So anybody that got a deposit at a banking institution, the first $25,000 they go in there, it's covered.
What
You got over that, though. You're not even near that. The breadcrumbs.
It's true.
But anyhow, he got money.
Yeah.
Okay, he got real money. So that real money, well, you got some back, because that's how it protect his system so anything happen. And that what we mean by financial stability. These checks and balances ensure things run well.
Thanks, man. You know got me thinking.
No problem, brother. Make good decisions, eh?
Respect.
All righty.
So you still think this regulation thing is foolishness?
I got from home. Let me do my sets.
Oh, this magical investment thing you're dealing with, I don't understand. You get your set, man.